Just trying to dip your toes in? This one's for beginners. We're talking the basics. Welcome to the Red Desk, the corner of the internet where we teach you the real estate stuff they should have taught you in high school. In these videos, we're talking about 3 mortgage basics that are super important. This is the must-know info to get you started on your mortgage journey. I'm not gonna gloss this over. Signing a bad mortgage deal could mean losing tens of thousands of dollars and being more stressed than a turkey on Thanksgiving. Not to worry. I'm going to get you prepared for your future home ownership. Let's start with 3 mortgage terms you need to know to make a good decision when deciding on your loan. Mortgages can seem complicated, but I'll keep things simple. That's why you're here, right? There's a lot of lingo in real estate. You don't need to know all of it. But there are 3 terms you gotta understand before getting a mortgage: APR, Underwriting, and DTI. First up is APR. This is the biggie, the blue whale in a sea of itty-bitty fish. You've probably seen a mortgage term described like this: 30-year fixed rate, 2.9% interest, and 3.2% APR, or something similar. What's the deal? Which percentage matters? Why the acronym? APR stands for annual percentage rate, and it's how people measure how affordable mortgages are. These rates change depending on the market, the fees a lender charges, and what you bring to the table financially. Specifically, APR is the total annual cost of the money you're borrowing, expressed as a percent. APR includes all the random fees and interest rate payments you're responsible for in your mortgage across a year, all packed up in one neat little percent. It usually includes fees like closing fees, loan approval fees, and underwriting fees. More on those in a second. Fees vary by mortgage lender, so looking at APRs alone isn't a perfect comparison. As a general rule though, the bigger the difference between interest rate and APR, the higher the loan cost. But be sure you're comparing apples to apples. If you've got a 30-year fixed mortgage, compare it to another 30-year fixed so that you can accurately decide what's best for you. And one last thing. There are 2 main types of APR you'll hear about: fixed and variable. Variable just means your rate can fluctuate over time. Fixed means it's locked in over the course of your loan. Simple as that. Next up, underwriting. An underwriter, not undertaker. Underwriter, just an expert who takes a look at your finances and figures out how stable you are. This helps the lender decide if they want to give you a loan. That service isn't free. That's why the lenders add underwriting fees into your APR. Think of underwriters like your lender's very protective and financially keen older brother. They're here to check you out and make sure you mean what you say. If all your financials look squeaky clean, the underwriter will let your mortgage lender know you're trustworthy. Underwriters look at a lot of factors that play into your overall financial health, but the main components are credit scores, bank statements, things you own like assets, tax returns, and maybe most importantly, your DTI, which brings us to our 3rd mortgage term you need to know: DTI, debt to income ratio. Debt to income ratio is simple. It just compares how much you get paid each month to how much you spend to cover your existing debt. You can calculate your DTI by adding up your monthly minimum debt payments, things like credit cards, student loans, car loans, and dividing it by your gross monthly income. So, if you make $6,000 a month and spend $1,000 each month on debt, your debt ratio would be 1:6, or approximately 17%. The lower your DTI, the better chance you'll get a loan. That's a wrap on mortgage basics. To recap, APR tells you how expensive a mortgage actually is. Underwriting confirms that you qualify for a mortgage, and DTI is the most common way underwriters check your financial health. Now that you know that, you're on the right track to buy a home, but there's still a bunch of other things you should know. If it's your first time going down the road to homeownership, then you should check out my step-by-step guide to the entire home buying process. If you think you've got your DTI in check and you want someone to help you to make the right buying decision, then check out Rocket Mortgage for help from some of my closest friends and colleagues. You can use the link in the description below to get there. Red Desk out. Thanks so much for watching, you guys. If you want to check out more Red Desk videos, click right here, and don't forget to like and subscribe. We'll see you next time.